My trading 212 ISA has changed a lot since March. The balance has gone from around £2,000 to nearly £10,000, and one of my new positions is already up 34% in the past month, even while the market's been red. So in this video, I'll break down what I'm holding now, how the portfolio's performed, and what I plan to do next. Back in March, things were simple. Just two ETFs, IITU and EQGB. I was investing £250 a month until August, when I stopped completely because valuations looked ridiculous, especially in tech, and what a few experts were calling an AI bubble. Fast forward to 7th of November, we've had a little pullback and I've been adding some new positions. My total balance now sits at £9,654, which is quite a jump from where I was back in March. Over the past year, my money-weighted return is up 26.5%, up 12% in the last 3 months, up 3.3% in the last month, and down 3.3% in the last week. But if we look at the actual gain on my current holdings, I'm up about 12% since I started last year, which I'll happily take given the market turbulence this year. Now, let's talk about what I'm holding and why. The first is Astera Labs, ALAB. This is one of my newest additions and probably the most exciting. Astera Labs builds connectivity chips that helps data centers handle the massive workloads from AI and cloud computing. My thesis is pretty simple. AI infrastructure demand is only going up. ALAB makes the specialized chips and software needed to ensure data flows reliably and efficiently between CPUs, GPUs, and so on. Basically, if NVIDIA is selling the brains of AI, companies like Astera Labs are building the nervous system that keeps it all connected. I prefer this to pure play data center stocks like Nebius and CoreWeave, which are capital intensive and have low margins. ALAB delivered outstanding earnings, beating both top and bottom line and raising guidance, but the stock dropped due to valuation concerns and competition fears. So there's some risk, but I like the price here and even lower. I know I've got a higher risk appetite than most, so this definitely isn't for everyone. Do your own research. It's less than 2% of my entire holdings combined. The next is iShares S&P 500 Information Technology, IITU. This ETF focuses purely on the tech sector within the S&P 500, companies like Apple, Microsoft, and NVIDIA. It's been my main long-term growth play, giving me exposure to the backbone of the US tech industry. Even though I haven't added since August, it's still a strong core holding and I expect it to keep benefiting as AI, cloud computing, and digital transformation continue to drive earnings growth across the sector. The third is Invesco Nasdaq 100, EQGB. This one gives me exposure to the biggest tech names, but it also has non-tech companies like Costco. Plus, it's the hedged version, meaning currency swings between the pound and the dollar don't impact my returns as much. Next is Rubrik, RBRK. This is another new addition to the portfolio. Rubrik is a data management and cybersecurity company that helps enterprises protect and recover their data after a breach. Cyber attacks are inevitable. Basically, Rubrik is the last line of defense. It's your insurance policy for when all other security measures fail. They help bring business back after a breach. I added it after seeing consistent growth in recurring revenue and partnerships with big names like Microsoft. But most importantly, its total addressable market is $48 billion, while its current revenue is just under $900 million. That means there's a lot of untapped potential for growth. If Rubrik continues to execute, and even if he only manages 25% of that market share, we're looking at massive upside potential for this company. With data breaches becoming more common, companies like Rubrik are increasingly essential, and I see it as a steady long-term compounder in the cybersecurity space. Next is Coherent, COHR. This is another new addition to the portfolio. I added this in October. I hold more of this in my other portfolio, but basically, Coherent makes lasers, optics, and materials used in many of the world's most advanced industries, everything from semiconductors to electric vehicles. Within the AI space, and this is why analysts are starting to notice this company. They are a critical supplier of optical transceivers and components that enable high-speed data transfer in AI data centers. I like this company because it's under the radar, but they delivered outstanding earnings last week, and the stock jumped 34% in just 1 month, when nearly everything else in the market was red. Unfortunately, I won't be adding any more unless it retraces. And yes, I finally bought Meta. I picked it up right after their earnings dip when everyone was panicking over rising capex and slower revenue growth. But they did address this, saying it was caused by a one-off tax bill from the One Big Beautiful Bill, which cost them nearly $16 billion. That made the results look worse than they really were. The core advertising business is still strong. Meta also noted that these tax changes will reduce their tax payments significantly in future years. Plus, they are investing heavily into AI and mixed reality. It might hit profits short term, but it's laying the groundwork for the next phase of growth. So, for me, that was the perfect buying opportunity, and I'm hoping to add more by the time this video is released. And finally, my experimental UK microcap pie. Now, this one's more of a sandbox. I've built a tiny pie with two UK microcap stocks, Defence Holdings and Pensana. Defence Holdings is building a software system for the UK government. Reminds me a bit of how Palantir started, while Pensana is a rare earth metals play, a bet on our domestic supply chains. This is important because much of the world's rare earth metals come from China. So, with all the geopolitical tensions, I think countries will want to develop their own domestic supply chains, which is why I invested in this. It's definitely very high risk, high reward, and not how I would usually invest, but it keeps the portfolio interesting. I've only invested £30 into this pie. It's definitely a 100x or zero play. I wouldn't lose any sleep over £30, but imagine if this went to £1,000 or even £10,000 in a few years. So that's where the portfolio stands. £9,654 total, up 26.5% over the last year. I've gone from two simple ETFs to a more balanced mix of stocks and ETFs. The plan now is to start dollar cost averaging again slowly if the market continues to stay at reasonable valuations. If you want to see how this portfolio evolves or how these new positions perform, make sure you're subscribed so you don't miss the next update. And as always, this isn't financial advice, just me sharing my own journey. Found it useful, give it a like, and I'll see you in the next one.